Welcome to Thorgood Tax Talk.
Hey everybody, welcome to another episode of Thorgood Tax Talk with attorney Shamsey Oloko. I'm your host, Mike Leon. Shamsey is a seasoned tax attorney and founder of Thorgood Law, where he defends clients in IRS audits, enforcement actions, and complex tax disputes. Today we're going to be talking about what happens when you can't afford your tax bill. Now, I'm going to want to listen up here, Shamsey. We'll cover the IRS programs designed to help, the mistakes that make things worse, and how the right legal strategy can make a huge difference. So, Shamsey, let's get into this at a high level. When someone owes far more in taxes than they can afford to pay, what will the IRS typically do?
Well, thank you once again, Mike, for being here today. Hopefully, I can, answer your questions, give more information out there that people who do owe tax debts, which is, quite a lot of people all over the country, may find helpful. So, with your first question, uh, what would the IRS do if you owe, large sums of money? Um, the IRS's job is to collect taxes, impose penalties, interest, and try to collect as much of that money as possible from taxpayers. Um, if we hopefully we can get into it, the IRS has a regimen where they will start to contact you to let you know that you owe this money and you owe that money. And after some time, if you don't respond or resolve the issue, then they escalate the issue into enforcement actions, which could lead, for instance, to them filing a lien against you. A lien, by definition, is letting the public know that, hey, listen, you owe taxes to the government that remains unpaid. Ramifications of that I can get into later on. Or they can actually file a levy against you. A levy is actually taking money that you own from your bank account, from your brokerage account, and so on and so forth, or garnish your paycheck. So that's what the IRS does, and that's how they go about getting that money from taxpayers.
So that's how they go about getting it. What are some of the ways that people can settle a large tax debate? And if you can, take us inside how each option would work.
Okay, so the first thing that's most likely for a taxpayer that owes money is to buy yourself some time. If I tell you, Mike, that you owe $250,000, you may not have that money sitting there to write a check. But if the IRS says, "Hey, listen, you can take your time," you know, you have to undergo. You have to tell the IRS, how much is your income, how much assets do you have, and then in a collaborative exercise, come to determine that, okay, you have 6 years from now to pay that money off. So you can start making payments today. The one caveat to that is, for as long as there's a balance outstanding, that amount owed continues to grow. So, many times, I have taxpayers who enter into a payment plan and they're paying, after like a year, and it seems like the balance hasn't changed. It's like a mortgage. It just sits there. So that's one option. The other big option, and I'm glad for the opportunity to clarify this, because there's a lot of advertisements. Oh, pay pennies on your dollar, you get IRS relief. It's called the offering compromise. By law, if you are truly unable to pay your tax debt, the government is required by statute to reduce your liability to something that you can pay. Couple of key issues. You have to prove that according to your income and according to your assets, your net assets, you cannot pay that money. So, for instance, if you make $20,000 a year, and I don't know, but you happen to owe, $400,000, you're not going to use $20,000 income with no assets to pay $400,000. So once you fully disclose that to the IRS, you demonstrate that there's no way you can possibly pay this money, IRS will lower the amount, or sometimes to zero, the amount that you owe the government, and you can get a payment plan and pay that over the years.
You know,
That's the often compromise.
I wanted to expand on that because how does the IRS decide whether is it simply the income to debt owed, or is there something? I know you mentioned it, but I would love for you to expand a little bit more. Like, do they have this front facing on their sites? Do they tell people how you would qualify for this offer in compromise?
No. It's through an interactive process. There's I don't want to get too technical. There's a series of forms called 433s. It's a disclosure form. It says it collects information from you. It says, oh, your name is Mike. Your address, or how many people in your household, and then you lay out all of your assets, your insurance, your
Mm,
stock, your home. If you own a home, how much is your loan, how much is the monthly payment, if you owe taxes to your state government, and so on and so forth, every asset that you have. Then you go to the income side. How much is your total income in a month? And then you go through your expenses for each month. How much you pay for rent, how much you pay for medication, how much is your transportation, how much do you pay for medical insurance, how much do you pay for taxes, how much is your withholding. So when all that is done and put together, there's a formula that it's open to both the taxpayer and the professional that's working this. They can come to a determination of how much you should be able to pay. And I mean, there's some back and forth. For instance, um, if you let's say, Mike, you have a preference for expensive cars, and you purchase a Rolls Royce, and your monthly payment is like I don't know, $5,000. Well, IRS is not going to think that's a great idea if you owe them money. So there's a limit to how much you are allowed for each item. So for your rent, if you want to live in a penthouse, well, not while you owe the IRS money. So they limit to how much your rental expense is allowed under that metric.
mm.
So once they do, so let's say you're paying $10,000 in rent, and your allowance for rent is 2,000. So they're gonna ignore the 8,000 and just use two, and they will come down with a net income available to pay the IRS, and that's how they come up with the numbers.
Shamsey, if I'm driving around a Rolls Royce paying 10,000 a month for rent, we're gonna have a different conversation for this show. But
Hey,
but let
listen,
me,
you never know.
yeah, you never know. But let me ask you, because I think you were mentioning it before, and the topic is timely because you always see these debt relief type programs. What relief programs might be available for someone who maybe doesn't qualify for this major reduction?
It's usually if you don't qualify for the offer and compromise, which again, most of those ads are talking about offers and compromise. But what they fail to tell you is the elaborate process that I just explained to you. Like if you come to me now and you say, "Hey, Shamsi, I want an offer and compromise." Okay, I don't. Am I going to qualify? I have no idea. You have to go through the form. There's a couple of forms. There's 433B that's going to extract all your information. We have to digest all those, synthesize that with the IRS numbers and see what you qualify for. Now, if you don't qualify for the OIC, then you can go down to getting yourself a payment plan, installment option, where you pay over time. Um, and in an amount that's more digestible to you, but you still have to pay the money,
Right.
but you're not gonna. So for instance, this is one that comes as a shock to people because they see the ad and they come in here and say, "Hey, listen, I want my reduction." I said, "Okay. By the way, do you own your home? Yeah, yeah. How much is your home worth? Oh, about 1.5. Okay, good. How much is your mortgage? Oh, about 75,000. And how much is your IRS? 200. Well, you can always go to a bank and get a loan for 200 and give it to the IRS. So IRS will now give you a reduction. So that's like an example of what
Mm.
they consider net assets. So you have assets in that home, you can get a HELOC for that amount, give it to the IRS, and pay the bank. So you will not qualify for a reduction.
Wow. Okay. All right. So then let me ask you. Now, this probably goes without saying, but I'll ask it anyway. How much financial documentation does the IRS usually ask for before considering any kind of debt relief? I'm assuming people should save all of their documentation, like you kind of just laid out there.
Right. It, It depends. Not a lot. Many times, some people come to me, and you ask them, do you own stock? Do you own cars? I mean, you'd be quite surprised. Many people that need relief don't own anything. So if you don't, you say no, 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 no. And I've actually had a taxpayer and it was a really easy one, was on public support. Well, if the government is supporting this taxpayer for sustenance, they clearly don't have money because they must have passed through some metric to qualify for the financial support. So those taxpayers, it's fairly easy. If you have more extensive assets and whatever, you probably won't qualify anyway. But to more pointedly answer your question, it's not a lot of information that the IRS is going to ask you. They don't usually ask for documentation, but you have to answer the questions. So like how much is your bank account? If you say it's 50,000, and knowing also, by the way, that the IRS know they can check how much is your bank account. All they have to do is write to Chase, and Chase will tell you, yeah, Mike owns 250 grand in his bank account.
Shamsi, you had me thinking there as you were talking, because it sounds like a lot of the times people try to do this on their own. And so, what are the most common mistakes you have found that people make when they try to handle this tax debt on their own? You gave a couple of examples, but what are some of the common mistakes that you have seen?
Well, so by and large, when people come to me, they've tried it on their own. I have someone who's actually going to call me in a little bit. They try to do it, and it doesn't work. There's a way you interact with the IRS revenue officer. There's a way. There's certain things that you can cite, and also when you talk to a revenue officer, especially, by the way, a revenue officer is an officer official of the IRS. That's his or her job is to go after the taxpayer to get money. That's their only job. How you came to owe the money, that's not their business. They know that Mike owes $50,000 and they want the money. So there's a way you can interact with the agent to get more favorable outcomes. For instance, um, if if there's a column, let's say you also owe state taxes, so you're paying a certain amount of money. The revenue officer can say to you, "Hey, listen, you happen to be paying too much money. I don't know what too much money is, but if that's the amount that the state is asking me to pay, then it's not too much money." So little things of that nature can help you to get to a better and more favorable outcome for your own application. And an experienced lawyer can do that for you.
Shamsi, I think there's a misconception too. Maybe you can dispel this about, well, the amount that's owed, or if it's an individual or a business, will change the way the IRS kind of handles the case. Is that true? If it is a smaller amount, or if it is an individual versus a business?
Well, technically, it shouldn't be true, but in reality, empirically, it is true. If you owe the IRS $200, they're not going to ask an employee a revenue officer that's paid $75,000 to come ask you to go after you for $500. It doesn't make any sense. They'll probably just send you letters, and if you don't pay, mostly by correspondence. However, if you owe $500,000, it's worthwhile for the IRS to come after you, to allocate personnel to come after you for the money. So technically, it shouldn't be different, but it is different. And also the difference between individuals and businesses, um, because with the individuals, the debt is personal to you. And there are more ways for the government to go after an individual than it is to go after businesses. But also, as an individual, you have more defenses than a business would. For instance, if IRS wants to file a lien against you. Again, a lien is IRS letting the entire world know that you owe taxes that you have not paid. Maybe you have a job that is detrimental to your job, and if that lien stays on your record, you're going to lose your job. And there are clients that fall into that category. We can go back to the government and say, can you reverse, the lien? Because if you do that, it's going to impair the taxpayer's ability to retain or gain employment. And they would do that. And most taxpayers on their own wouldn't know how to do that. And there's also something called the collection due process. If the government wants to be aggressive in enforcing collection actions against you, you have a right to go to independent office within the IRS and told that process while you resolve the issues. And in many times when the IRS says, "Hey, listen, Mike, you owe $20,000, you didn't pay," da, da, da. If you stop the process and take a second look at the liability, it may turn out that you actually don't owe any money. It could be an error from the IRS. So it is always helpful, always, to have an experienced tax professional to guide you to navigate those rough waters.
Yeah. Well, I was just about you just fed into a perfect follow because I was just going to say, what's the difference of why does it make such a big difference in acting quickly and getting professional help? But why don't we put a bow on this? Can you give us an example of maybe somebody who came in with this overwhelming debt and you were able to help them turn things around?
Thank you for that question, Michael, because this is one of the high points of my career as a tax lawyer. A taxpayer came into our office and owed the IRS $1.3 million. And they wanted OIC. And we're like, wow, this is going to be a heavy lift. And we went at it, went back and forth, back and forth, back and forth. And voila, at the end of the road, the tax debt was reduced to zero. It's the best we've ever done. So one day you owe IRS $1.3 million, and the next day you don't owe them anything. So that's technically an income of $1.3 million.
Right.
So that's one of our high points.
Well, if you want to find out more about that, you got to visit thorgoodlaw.com. But Shamsey, I can't thank you enough for the insights and analysis on this topic. Truly appreciate it.
Thank you, Mike. Appreciate it.
Yeah, and thank you everybody out there for listening to Thorgood Tax Talk. I just said I don't think I have to sell it anymore, but if you're facing serious tax debt, you need a plan, go to thorgoodlaw.com right now to connect with Shamsey and his team. Do me a favor, hit like and subscribe for this episode today and share it with somebody if it may help them. As always, I'm Mike Leon. Thanks for watching, everybody.
Thank you.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.